In 1944, at a pivotal moment in history, delegates from 44 Allied nations gathered at the Mount Washington Hotel in Bretton Woods, New Hampshire. This gathering was not just another diplomatic event. It was a moment that would forever shape the future of the global economy. As these leaders and financial experts gathered in a room, they were aware of the crumbling state of Britain's finances. After 2 world wars, the once mighty British Empire found itself drowning in debt, with its national debt standing at a staggering 249% of its GDP. Britain, which had reigned as the world's financial superpower for centuries, was now on the brink of collapse. The financial leadership of the world had passed its tipping point. At this critical juncture, a decision was made that would change the global economic order for generations. The British pound, which had been the world's reserve currency for over 200 years, was now to be replaced by the US dollar. This was no ordinary transition of financial power. It was a part of a recurring historical pattern that had unfolded over 5 centuries. As history has shown, when an empire reaches its peak, overextends itself, and eventually collapses, the next in line takes over. From the Portuguese to the Spanish, the Dutch to the British, and now the Americans, this cycle of rise, peak, overreach, and collapse had played out before. But why did this happen, and what does this mean for the future? Let's step back in time long before Bretton Woods to understand the root of this pattern. In 1450, Portugal became the first empire to dominate global trade with its currency, the Portuguese real. Portugal's dominance didn't come out of nowhere. Through groundbreaking advancements in navigation, Portugal opened new sea routes to Africa, Asia, and the Americas, capitalizing on the old spice routes that had been blocked by the Ottomans. Portugal's empire grew to encompass vast territories in Africa, India, and even China through Macau. At the height of its power, the Portuguese real became a trusted currency across continents, accepted in far-reaching trade networks. Yet, this success also marked the beginning of their downfall. The cost of maintaining military outposts on 4 continents drained Portugal's resources. As competition from other rising powers such as the Dutch and the British grew, Portugal's empire began to falter. Internal instability and a royal succession crisis in the 1530s only added to the strain, and by 1580, Spain absorbed Portugal into the Iberian Union. Thus, the Portuguese real faded from prominence, making way for Spain's silver to take its place. Spain's rise was propelled by the discovery of the richest silver deposit in the world, the Potosi mines in Bolivia. This silver became the backbone of Spain's financial dominance, and its coin, the Spanish dollar, became the most trusted global currency between the 16th and 19th centuries. The Spanish dollar was not only the currency of Spain but also became the de facto standard across the Western world, and it even served as legal tender in the United States until 1857. Spain's reign lasted for around 110 years from the 1530s to the 1640s, but just like its predecessors, it eventually crumbled under the weight of its own success. The lavish spending of the Spanish crown, fueled by ever-increasing debt, led to a series of defaults. Spain's silver influx led to rampant inflation, and when the supply of silver dwindled, the country found itself in financial disarray. By the mid-1600s, Spain's dominance had ended, and the Dutch Republic was ready to rise. In the 1600s, Amsterdam became the world's financial capital. The Dutch guilder emerged as a powerful and trusted currency, backed by innovations in trade and finance. The Dutch were pioneers in creating the world's first stock exchange, marine insurance, and new financial instruments like acceptance credit and publicly traded shares. The Dutch Empire thrived, and from 1642 to 1720, the guilder dominated global trade. However, as was the case with all the empires before them, the Dutch fell victim to overreach. The Dutch East India Company collapsed under the pressure of military conflicts, especially during the Fourth Anglo-Dutch War, and the Dutch economy was brought to its knees. By the late 1700s, the British Empire, with its industrial power and vast colonial territories, had emerged as the new financial powerhouse. The British pound would soon take its place as the global reserve currency. The rise of Britain was a direct result of the Industrial Revolution, which radically changed global trade and economics. For over 200 years, from the 1720s to 1944, the British pound reigned supreme in world markets. London became the global hub for insurance, commodities, and investments. At its peak, More than 60% of global trade was transacted in pounds. The gold standard further solidified the pound's dominance, and by 1816, Britain's currency was regarded as the most stable in the world. The British Empire controlled vast territories, with 458 million people, a quarter of the world's landmass, and over 20% of the world's population under its control. It seemed that Britain's financial power would never wane. But as history shows, all empires eventually faced their reckoning. The First World War marked the beginning of Britain's financial decline. The war drove the national debt from £650 million in 1914 to over £7 billion by 1919. The Second World War only deepened Britain's financial crisis, and by 1945, its government debt reached an astronomical 270% of GDP. Britain had won the war but lost its financial crown. The global financial system was in need of a new direction. In 1944, the world's financial leaders convened at Bretton Woods to rebuild the global economic system. Here, they created the International Monetary Fund (IMF) and the World Bank. The new Bretton Woods system tied all major currencies to the US dollar, and the dollar itself was pegged to gold at $30 per ounce. The US dollar officially replaced the British pound as the world's reserve currency, and for the next quarter century, the US dollar dominated global trade. The dollar had become the financial backbone of the post-war world. However, by 1971, President Richard Nixon suspended the dollar's convertibility into gold, signaling the end of the gold standard. But the dollar didn't collapse. Instead, it evolved, finding new stability through the oil trade. This transition marked the birth of the petrodollar system. By 1975, after the OPEC oil crisis, a deal was struck between the US and Saudi Arabia. In exchange for military protection, Saudi oil would be sold exclusively in US dollars. This agreement set the stage for a new financial order. By the mid-1970s, all OPEC members had agreed to price their oil in US dollars, ensuring that the global demand for oil would continue to prop up the dollar. This shift allowed the US to run massive deficits without the typical consequences that would have crushed other nations' currencies. The dollar became entrenched as the global reserve currency, further solidifying the US's financial dominance. For decades, the US dollar remained unchallenged, and the petrodollar system worked smoothly. By the turn of the 21st century, the US dollar accounted for over 70% of global foreign exchange reserves. This dominance allowed the US to print money without facing inflationary pressures and to finance its vast military presence around the world. The US military, with its 900 bases across 130 countries, became a symbol of American power and influence. Yet, even as the dollar remained dominant, cracks were beginning to form. By 2024, the dollar's share of global reserves had fallen to 57.8%. Foreign investors' holdings of US Treasury bonds had also declined significantly, dropping from over 50% in the 2008 financial crisis to just 30% in early 2025. The world was beginning to explore alternatives. A new challenge was emerging from the BRICS nations Brazil, Russia, India, China, and South Africa. These countries, along with several new partners, were working to build financial systems that bypassed the dollar entirely. The BRICS nations were developing the BRICS Bridge Payment Network, which would use central bank digital currencies to settle transactions directly, avoiding the dollar. The shift away from the dollar was accelerating. These countries were developing their own financial systems, reducing their reliance on the US. As of 2025, more than 20 nations, including Egypt, Iran, and Indonesia, had joined the BRICS nations in exploring alternatives to the dollar. Meanwhile, the US's own financial health was deteriorating. By March 2025, the US public debt had reached a staggering $29 trillion, and total government debt stood at $36 trillion. The U.S. economy was now deeply in debt, with a debt-to-GDP ratio of 124%. The U.S. had spent over $8 trillion on military operations in the Middle East, further exacerbating its fiscal situation. This pattern of rise, a peak, overextension, and eventual collapse had played out repeatedly throughout history. From Portugal and Spain to the Netherlands and Britain, every empire had experienced the same trajectory. The US dollar had now been the global reserve currency for 81 years, just a few years shy of the historical average lifespan of such currencies. which typically lasted between 78 and 220 years. The signs were clear. The US was entering the overextension phase, and the dollar's dominance was beginning to slip. As the US military presence continued to grow and its debt continued to rise, the US was facing the same warning signs that had preceded the collapse of every other global reserve currency. The BRICS nations were not just building alternative financial systems. They were positioning themselves as the new centers of economic power. China, in particular, was making significant strides in reshaping the global financial landscape. The rise of the yuan as an alternative to the dollar was gaining traction, and China's economic influence was rapidly expanding. The question on everyone's mind is, what will happen next? Will the decline of the US dollar be a slow, gradual process, as was the case with Britain? Or will it happen more suddenly, as it did with the Dutch and the Spanish? The future of the US dollar and the global financial system is uncertain, but history offers a warning. Every reserve currency, without fail, eventually loses its power. The only question is when, not if, that will happen. To understand the future of the US dollar and global reserve currencies, we need to examine the 4 stages that every empire has gone through: rise, peak, overextension, and collapse. The first stage is rise. A nation gains dominance through innovation, whether in trade, finance, or military strength. The Portuguese, for example, gained dominance through advancements in navigation. Spain did so with silver. The Dutch built modern finance. Britain's Industrial Revolution reshaped the global economy. The US rose after World War II with its industrial might. The second stage is peak. At this point, the reserve currency becomes almost universal, used in over 60% of global transactions. The empire seems invincible, with financial power spreading across the world. This was true of the British pound and later the US dollar. At their peaks, these currencies were used in almost every international transaction, and their dominance was unquestioned. Stage 3 is overextension. Here, the empire's power begins to fade. Massive military costs, rising debt, and waning productivity start to weaken the empire's financial position. Portugal, Spain, the Dutch, and Britain all reached this point. Today, the US is following the same trajectory. Its military expenditures and growing debt are beginning to take a toll on its currency's stability. The US is no longer the only financial power in the world. Countries like China are asserting their influence, and the BRICS nations are developing alternatives to the US dollar. Finally, we come to stage 4, collapse. The reserve currency loses trust, and power shifts to another nation or a group of nations. Every empire that has been a global financial power has eventually experienced this stage. Portugal's reign ended when Spain took control. Spain fell into a period of decline after its silver supply dwindled. The Dutch shrank to a regional power after their financial dominance faded. Britain lost its empire after the Second World War. Will the US follow the same pattern? The signs are clear. The dollar's time as the world's dominant reserve currency may be coming to an end. What happens next? History doesn't repeat itself perfectly, but it does rhyme. If the current trends continue, the US dollar will eventually be replaced, just as every other currency before it was. The only question is how quickly this transition will occur. Will it be a slow decline like Britain's, or will it happen suddenly like the collapse of the Dutch Empire? The rise of the BRICS nations and the growing influence of the yuan suggests that the world is moving toward a multipolar financial system. A world where the US dollar no longer holds sway. The future of the global economy is shifting, and the US may no longer be at its center.